Tesla, once hailed as the spearhead of the world's electric vehicle surge, now finds itself buffeted by one setback after another. Lately, it has been at the center of growing protests and attacks, even incidents at Texas showrooms that have alarmed observers. Those tensions are discouraging potential buyers and stirring heated debate on both sides. Under Elon Musk's leadership, Tesla spent years at the forefront of the EV world, pioneering breakthroughs in car styling, software features, and battery design. Vehicles such as the Model S and Model 3 became emblems of a cleaner, tech-savvy future. The brand wasn't just another automaker, it embodied the promise of next-generation transport. Yet that story is now shifting in unexpected ways. Heightened trade disputes, growing economic nationalism championed by Donald Trump, and Musk's own forays into divisive politics have dented Tesla's reputation, especially in vital markets like Europe. Data from January through March of 2025 paint a stark picture. Sales in Germany, where Tesla's Berlin factory sits, plunged by over 70% compared to a year earlier. In February 2024, Tesla shifted more than 6,300 cars in Germany. By February 2025, that figure sank to just 1,429. Similar slumps, ranging from 34 to 48% losses, hit France, Norway, Denmark, Spain, and the Netherlands. Several factors lie behind this dramatic downturn. Leading the list is Elon Musk himself. Once embraced in Europe as a daring innovator, he has become a lightning rod because of his vocal support for Trump and what many see as friendly nods toward Europe's far-right parties, notably Germany's AfD. Rumors that he applauded the AfD's nationalist platform sparked outrage and tarnished his standing among Europe's largely center-left electorate. In a recent German poll of over 100,000 people, 94% said they would never buy a Tesla again. But politics tell only part of the story. European carmakers have closed the gap, rolling out their own advanced EVs. Volkswagen's ID line, BMW's i4, Mercedes EQ series, and Renault's Zoe now rival Tesla on features, style, and price. Many local buyers find these homegrown alternatives more in tune with European values, both in how they affect the environment and in how neutral they keep politics. To make matters worse for Tesla, its rollout of new models in Europe has been sluggish. The Berlin factory, despite its promise, has struggled to ramp up, especially with the Model Y, causing delivery backlogs. On top of that, Tesla's pricing in Europe remained stubbornly high or only dipped slightly, while in the US prices fell sharply. Consumers have asked why they should pay more for a Tesla when European rivals match or exceed its value. Across the Atlantic, the picture isn't much brighter. In the US, Tesla must fend off a surge of competition from long-established names like General Motors and Ford, both investing heavily in EV lines. Brands from Asia and Europe are also making inroads. Though some Trump fans still rally behind Musk, the broader view of Tesla has cooled. Its market capitalization, once over $1 trillion, now hovers between $600 and $700 billion, a sign that investors are less confident. Is that dip due to Musk's political controversies, the fiercer competitive environment, or a mix of both? In China, Tesla's fortunes have dimmed similarly. February 2025 preliminary figures from the China Passenger Car Association show locally built Tesla sales at just 3,688 units, a near 50% drop from the prior year. By contrast, Chinese heavyweight BYD saw sales jump 161% to over 38,200 cars in the same period, both home and abroad. Analysts link Tesla's weak showing to production hiccups at its Shanghai factory, and to rising Chinese pride in local brands. These overlapping challenges, political backlash, stiff global rivals, and Tesla's own missteps, have put the company at a crossroads. In response, Trump and Musk are said to be coordinating through a new Department of Government Efficiency to revitalize U.S. auto manufacturing and lend Tesla a hand. A key plank in this plan took effect on April 2, 2025, when President Trump imposed a 25% tariff on all foreign-made vehicles. He dubbed that date, Independence Day for U.S. autos, claiming the move would bring factory jobs back home and boost American-built EV output. Washington forecasts the tariff could yield $100 billion in revenue each year, though economists warn of unintended fallout, higher prices for buyers and strained global supply links. Even U.S. giants like GM and Ford rely on parts from overseas, so they stand to feel the pain too. Some estimate that if the tariff were fully passed on, it could add as much as $12,500 to a new car's sticker price, at a time when average vehicle costs are already near $49,000. To soften that blow, Trump has floated tax breaks on loan interest for U.S.-built vehicles, aiming to make domestic options more affordable. In the short run, these protectionist steps could favor Tesla, which builds much of its lineup in America and would be shielded from cheaper Chinese and European imports. At the same time, the company is pushing into new markets. Tesla announced plans to launch in Saudi Arabia in April 2025, with a big debut event set for April 10 in Riyadh. While it already sells cars in parts of the Middle East, like the UAE, Jordan, and Qatar, the Saudi market is the largest and most strategically important. Gulf governments are plowing billions into green projects to diversify post-oil economies, and Tesla hopes to tap that wave. The Saudi launch might also signal a thaw in Musk's rocky ties with the kingdom. Relations soured in 2018 when he tweeted about taking Tesla private with promised Saudi funds, a deal that never appeared. Now, amid Trump's renewed outreach, Saudi officials say they plan to invest over $1.3 trillion in U.S. industries, including defense and autos. With Trump slated to visit, Tesla's timing looks calculated. Some Saudis worry how Teslas will cope with extreme desert heat, but most reactions online have been upbeat, with eager questions about prices, delivery dates, and service support. Meanwhile, BYD isn't standing still. The Chinese giant has signaled big plans abroad, eyeing the UK, Southeast Asia, and Latin America, and aiming to sell 800,000 vehicles internationally by the end of 2025. Unlike Tesla, BYD offers both hybrids and fully electric models, a range that suits markets where buyers still rely on combustion electric combos. Financially, BYD is booming. It reported $17 billion of revenue in 2024, marking a 29% rise and sitting not far behind Tesla's $97.7 billion haul. Its diverse moneymakers, batteries, storage systems, electronics, help it weather downturns. Tesla remains a leader in battery tech and self-driving software, but BYD's low prices, tightly integrated manufacturing, and home court dominance in China make it a dangerous adversary. North America, however, remains tough for BYD. Steep import tariffs in the US and Canada will likely block its cars, and Trump's new 25% duty will only deepen that barrier, giving Tesla a breathing space. In short, Tesla's formerly unchallengeable perch as the EV world champion is under siege, from political headwinds in Europe, from China's rising home teams, and from mounting rivals in the US. Trump's tariffs and Tesla's move into the Gulf may buy some time, but the road ahead looks rocky. One thing is clear, the electric car wars are intensifying, and Tesla will have to push harder than ever to stay on top.